This is exactly how Caroline stole $11 billion and brought down a huge crypto empire. This young lady went from being a passionate mathematic nerd to a public criminal. This is a story of Caroline and FTX. Grab popcorn if you like. This story probably has more plots and twists than your favorite TV show. So let's begin. You see, for years, FTX was the king of the world of cryptocurrency. With its founder, Sam Bankman-Fried, and his unending zeal to rule the crypto world, FTX grew into becoming a crypto empire. FTX was a symbol of innovation and the place to go for digital assets trading. And somewhere in the background was Caroline, also orchestrating affairs. It seemed like the perfect duo, a very charismatic and extremely passionate leader, and a maths geek who made sure the numbers were right. Together, they revolutionized the whole crypto industry and recorded massive wins. But there was more to this success. Sam Bankman-Fried and Caroline were hiding something bad. But this secret did not stay hidden forever. They got exposed, and oh boy, the empire they worked hard to build came crashing down faster than anyone could blink. Sam Bankman-Fried, I'll just call him SBF for the rest of this video, founded FTX in 2019. And without wasting much time, FTX started making waves. It came with innovative trading opportunities that investors just couldn't say no to. A few years after the launch, FTX already had billions of dollars of investor money. What does this tell us? They easily and quickly secured the trust of the investors. But this trust got shattered on November 2022 when the company filed for bankruptcy. Imagine a company you put all your money in coming out to say they're now bankrupt. This is exactly what happened, and in the middle of this disaster was Caroline Ellison. All fingers were pointed at this young lady, accusing her of an evil scheme that led to the ruin of FTX. But let's rewind a bit, back to the earliest days of FTX. As I already said, FTX was founded by SBF. SBF was a man of vision. He wanted to bring something spicy to the crypto world, and trust me, he did. He offered a platform with derivative trading. You see, before this, investors could only buy and sell crypto. But with SBF's invention, investors could now place bets on the future of digital assets without actually owning any of them. Let me explain that with an example. It's just like betting your money on Ethereum to become higher or lower in a particular period in the future. This new development brought in new types of investors who wanted more opportunities and advanced financial tools. But this new and cool feature wasn't the only reason for the rapid growth of the company. SBF recognized how people viewed the crypto market. They didn't trust them 100%. So what did he do? He started publicly cooperating with the authorities in charge of formulating and enforcing financial laws. He constantly went back to check the laws to make sure FTX was not breaking any. These steps set FTX aside and above the competitors, as while the competitors were seen as tricky, but FTX was seen as trustworthy. With this combination of reliability and innovation, FTX could not be stopped as they went straight to the top. But FTX wasn't the only company making waves. SBF founded a previous company in 2017, named Alameda Research. And this is where Caroline comes in. He founded this company with Caroline, and what the company did was to generate profit in the crypto world. This company was filled with very skilled traders who had used very complex trading strategies to maneuver the trading world to find profitable trading entries. This company also rapidly grew into becoming a powerhouse in the industry, and although was a complete entity from FTX, had a very close relationship with them. An important aspect of their relationship was how they easily and seamlessly shared employees, as individuals held positions in both companies. But that was not all. Alameda mainly used FTX for all their trades. Aside from Alameda being big money traders, their heavy reliance on FTX earned them some advantages over other traders. This relationship did not sit well with others as people started getting troubled by it. First was the issue of special treatment. People got worried that FTX provided Alameda with lower fees and access to insider information that gave them an unfair advantage over others in the FTX platform. But that's not all. The lack of transparency around FTX and its operations was another major red flag. You see, compared to other established financial institutions, FTX kept its mode of operation and reports a secret. People didn't trust FTX's liquidity and the value of the FTT, its native token. Also, analysts couldn't access the true health of the company as the company didn't provide internal audits. With concerns like this growing daily, the press started entering the scene, but with negative reports. And one thing about the press is, they know how to convince or have people think a certain way. Slowly, people started losing confidence in FTX. But you see, these concerns and reports, although had their impact, were still just mere speculation. FTX was still king, but something shocking happened in May 2022. Both FTX and Alameda were stunned. In May 2020, there was a major event in the crypto world. A so-called stablecoin crashed, Terra USD, UST. The UST was pegged to the value of the US dollar, thus making it a stablecoin. But with its dramatic crash, perspectives changed. You're probably asking how this crash affected FTX and Alameda. Well, there are speculated and confirmed reasons. Let's go over the speculated reasons first. You see, crypto exchanges like FTX relied on sufficient liquidity to remain healthy. That means FTX needed to have enough assets ready to meet customers' demands. But with the crash of UST, there was a massive sell-off as investors lost faith in the market and rushed to sell off all they had. I mean, you can't blame them. They just saw a stablecoin crash, and at that point, anything was possible. Back to FTX. It is assumed that this massive sell-off strained its liquidity as a very large number of users rushed to withdraw their funds. It is also speculated that Alameda was exposed to UST and other assets that were affected by the crash. If this speculation was true, imagine the huge loss that Alameda had to bear, and the strain that would place on their financial obligations. Although those were just speculation, and of course very reasonable ones, what was certain was the climate of fear and unreliability that this crash caused, affected the customer's faith, and would later lead to FTX's eventual downfall. Not only long after the crash, another shocking thing happened, a single tweet that changed the whole game. The tweet was from Binance's CEO, Changpeng Zhao, FTX's biggest competitor. In the tweet, Zhao announced that Binance would be liquidating its holdings of the FTX native token, FTT. This announcement was the sign the already doubtful investors were waiting for to make their move. People felt Zhao had lost faith in the token, and others felt he had inside information. And don't forget, people were still healing from the UST crash. Ultimately, the tweet was followed by a massive withdrawal of funds from the FTX platform. FTX was thrown into liquidity crisis, and whether intended or not, the tweet dealt a major blow to Caroline and the entire FTX empire. But hold on. Don't tell me you'll just continue watching and enjoying the video without giving the channel a little love. Smash that like button if you enjoyed the video so far. And if you haven't already, hit the subscribe button and turn the notifications on. You don't want to miss any videos from us. And yeah, let's get back into the video. With drama unfolding in FTX collapse, attention shifted to Caroline. As CEO of Alameda Research, she was placed under scrutiny. And here's why. She had a very close relationship with SBF. In fact, they lived as roommates in the Bahamas, and maybe even dated, at least. That's what a lot of people think, and maybe they're right. But anyway, due to their relationship, she came under heavy suspicion. Also, remember I already talked about how Alameda was intertwined with FTX. Caroline once again had another reason to get dragged. As CEO of Alameda, she had to answer all the questions targeted at Alameda. Also, due to her very close relationship with SBF, She still had to answer questions directed at FTX. So let's talk about the questions that were asked. No, a better way to put it is the allegations that were raised. As investigations into the collapse of FTX intensified, some shocking allegations emerged, and these allegations focused on Caroline and how much she manipulated the whole system. One of the allegations was the inflation of FTT. Investigations showed that FTX may have artificially inflated the price of its own native token. This artificial inflation was possible by buying and selling FTT itself, looking like a plan worked between FTX and Alameda Research to create an illusion of high demand. They could also create this artificial illusion by giving preferential to major holders of FTT, once again pointing fingers at Alameda Research and mainly Caroline. Another allegation was the usage of FTT as collateral for loans between FTX and Alameda Research. This issue of loans is specifically bad because FTT, which was used as collateral, was already being tampered with. The value was inflated. What would happen if the price resets or drops? It won't be able to cover for the loans, thus causing an accounting error. So basically, with the artificially inflated price, FTX could attract more buyers, and with more buyers coming in, and with the type of relationship that exists between Alameda and FTX, Alameda had unrestricted access to customers' money to use to back up loans and also take risky trades. Now that right there was the part that really cornered Caroline. That was a diversion of funds at its finest. Anytime a customer deposits money on FTX or any crypto exchange platform at all, they expect the money to be kept strictly and should only be used for legitimate and reasonable trading. But that was not the case with FTX and Alameda, and that was a serious violation of the fundamental trust that was expected, at least ethically. Aside from the coverage of loans, there were other speculated reasons for this diversion of funds. There is a possibility that Alameda used these funds to cover all the losses that were made through their risky strategies. You see, Alameda had to maintain a stable record and couldn't afford to show their huge and unnecessary losses. So they used the diverted funds for that. Also, the diverted funds could be used to fund high-risk investments that Alameda didn't have the financial power to fund. And of course, Caroline was in the center of the whole thing. She was the CEO, she made the decisions, and nothing happened without her approval. In November 2022, after FTX could no longer take the heat and filed for bankruptcy, this news was mind-blowing. Don't get me wrong, at this point it was obvious all was not well at FTX, but filing for bankruptcy? I don't think anyone saw this coming. The company was worth tens of billions of dollars. Dropping from a level that high was just too ridiculous. Investors couldn't believe their ears, the whole crypto ecosystem entered a state of shock, and regulators became restless, trying to understand the full scope of the situation. Caroline, on the other hand, got exposed to a different reality of life, a future faced with uncertainty. The Commodity Futures Trading Commission, CFTC, charged her with engagement in a fraudulent scheme, material, and artificial misrepresentation in connection with the sale of digital assets, commodities, and the perpetuation of alleged fraud of FTX customers and investors. She admitted to committing fraud under SBF's direction, also using customers' money to run Alameda's operations and manipulating trading of the FTT tokens. She faced a maximum sentence of 110 years imprisonment for her guilty plea of about 7 charges. But luckily for her, she's wise enough to cooperate with the investigation, and because of that, is likely to receive substantially reduced punishment. Due to her cooperation, she's not expected to face more prosecution. But as it stands now, there haven't been any definite legal rulings as the case is still ongoing. As a matter of fact, this case can take years to conclude, and at this point, you just have to feel for her. Years of uncertainty and hoping and praying. SBF, on the other hand, on March 28, 2024, got sentenced to 25 years in prison after getting testified against by Caroline. But if there's any happy ending for SBF, his sentence is below the maximum statutory sentence of 115 years, and even lower than the 40 to 50 year sentence that the prosecutors wanted. But is that even a happy ending? His sentence was, as a matter of fact, a lot higher than the 6 to 7 year sentence that his attorney wanted. So while SBF has gotten his sentence, Caroline is still waiting for hers. And that brings us to the end of the video. But before I go, I want to know what you think. Do you think Caroline truly manipulated the system, or was she manipulated into doing the bidding of SBF? Does she also deserve to go to jail? I mean, look at this face. She doesn't look like she's going to survive jail. Let me know what you think in the comments, and don't forget to support the channel by hitting the subscribe button if you haven't, and smashing the like button. Enjoy your day. I'll catch you in the next one.